the 5% first homeowner deposit scheme and the property market. Guys, today, this is what I want to talk about. There's been a lot of talk over the last month or so about this scheme. It's just come in 10 days ago, October 1, and I wanted to have a quick chat about that, what it means for the property market. Well, maybe this is a bit of a distraction, and there's something else that's looming in the background that actually has the capacity to have a much larger impact on the property market. Let's jump into it. When I say the 5% deposit scheme, I mean, this had a few different names over its period of time. So first home loan deposit scheme, first home guarantee, 5% deposit scheme. It's all basically the same thing. This scheme, a lot of people are out there saying, oh, this is a new scheme. It's not. It started as the first home loan deposit scheme, I want to say in 2021, maybe 2020. It was definitely at the start of the pandemic in that area. What it was is what it sounds like. If you're a first home buyer, you need 5% as a deposit. And then what they had is price caps. So you couldn't purchase a property over a particular price depending on where you lived in the country. So I think in Melbourne it started off as above 600,000. Out here in the suburbs, I seem to remember 600,000. What I want to say about that, it had income caps. I think if it was a joint income, the joint income cap might have been 160 grand to start with. Whatever it was quite modest. And what that meant was high income earners couldn't access this scheme. This scheme is meant to low income earners who want to get into a base property in the property market. What's changed? So October 1, they've withdrawn the income cap. So now you could earn any income. You can be a $500,000 income earner. And if you're a first home buyer or haven't owned a home for the last 10 years, then you can get access to this scheme. So it's now no longer targeted to low to middle income earners. The second thing they did was they've risen, I don't know if that's the right word, all the property price caps. So in Sydney now, you can buy a property as a first home buyer up to $1.5 million. There's been quite a lot of kind of talk about this in the media. Is a $1.5 million home really a first home buyer home? And I guess that's a fair enough argument to make. Unfortunately, the government's not listening to that they've taken, I guess, the reins off. We're only giving these things out to kind of the lower end or the medium end of the market. And it is what it is. The other thing they've taken off is the amount of spots available on these schemes. Before it was limited to a certain amount of spots. It started off as 10,000, I'm pretty sure. The scheme got really confusing because it was divided up into a few different ones. So there was first home guarantee, regional home guarantee, family home guarantee, which was for single families. There might have been another one mixed up in there. So they had, I think it was 40,000 spots per year. But they were all divided up across these schemes. There's no spots cap anymore, I guess you could say. It's basically unlimited, the amount of people that are going to go after these loans. How it benefits first home buyers is, A, the government are guaranteeing the loan, so they don't have to save up for mortgage insurance. That is the big difference. Sometimes if you're comparing the savings with the guarantee, there's a cheaper interest rate involved as well. But they're the two main benefits. What are people saying? I'll be very basic and be very clear. People are saying it's going to push prices up. And I would agree with that. I probably would question the amount. Some people think it's going to kind of smash the property market and we're going to get another boom. I'm not so sure about that. I'll kind of sit back and watch like the rest of us will and actually see what happens with this train wreck we call the Australian property market. I guess I should say why I'm not sure about that. A lot of people think it's just 5%, but it's not. You've got to cover the stamp duty as well and any other costs involved. So, for example, if you're a first home buyer buying a property in Melbourne for $1 million on this scheme, you got to pitch in your 5%. That's 50 grand. But then you got to cover stamps and whatever other costs are involved. Let's say that's 65 grand. You're going to have 115 grand up front. So it's still not as if, people that haven't saved anything can get into this market, or people with low savings can get into this market. 115 grand is still a significant amount of money you need to have saved up to be able to jump on this scheme. So there's going to be a lot of people out there who are on higher incomes, but they just don't have the savings because they've got to pay rent. Maybe they're in a city, they've got to pay for an inner city lifestyle, all of that sort of stuff. I'm not sure about how it affects the market in that way. What I want to say about the property market and I've been looking at this for a little while, to me it's death by 1,000 cuts. So it's whatever we do to help, there's a trade-off there. And that trade-off hurts the market. So for example, in this scheme, yes, it helps first home buyers get into the market. Now, offer lower deposit, but that's going to push more demand into the market and push prices up. How much, we don't know, but I think we would all agree it has a positive effect on the price, and that's going to hurt first home buyers coming into the market in future years. Having said that, I think there's something that people aren't talking about a lot, and potentially we're going to be talking about this a lot in the coming months and years. Has got the potential to have a far greater impact on the property market than the 5% deposit scheme. That scheme is Help to Buy. If you followed me on the channel before, I've spoken about Help to Buy a lot. The reason I've spoken about Help to Buy a lot is because it pushes a lot more money into the market. Let me give you an example. Out here in Frankston, where I am, there's quite a lot of people who their borrowing is capped out at $500,000 or $600,000. In the past 5 years, the market has moved so these people cannot any longer buy a house for that amount of money. So these people are priced out. The Help to Buy scheme comes in and says the government comes in and helps you out. They will co-buy for an established property 30%. So they'll pitch in up to 30%, or for a new property, a house and land, for example, they'll pitch in up to 40% of the purchase price. So these clients that could only afford a $600,000 property before can now afford a property worth a lot more, $800,000 or $900,000. I don't know the numbers, but my point is that these people are going to rock up to a property that's maybe advertised for $700 and will go for $800 at auction because that's how things work. But if they can go to $850, they're going to go to $850. Why would they not go to $850? Their loan amount isn't going to change. They don't have to pay the government a monthly loan repayment on this scheme. Why wouldn't they spend more? And this is the point I'm trying to make. It only takes one of these people at an auction to then force the rest of the bidders higher. I get a bit of pushback on this because there's only 10,000 spots available per year on this scheme. And people are saying, well, that's just not enough buyers to impact the market. So firstly, you may be right. Time's going to tell on that. But one thing I want to say to that, one thing which can prove that kind of belief or whatever it is wrong, is that governments aren't going to pull this away. They don't pull the free money away. They love giving more for these property schemes. Let's talk about the first home loan deposit scheme. It was 10,000 spots 4 or 5 years ago. Now it's unlimited. Do you see what's happening here? The first homeowner grant, 2,000. It's been in for 25 years. It's morphed and changed, and more and more and more money has been given into this market through government schemes. That argument to say that, well, there's not enough people to impact this market, maybe that's correct. But if what happens to the Help to Buy scheme is the same as how the 5% deposit scheme goes, it means the property market is going to go to unthinkable highs. That is all I'm going to say about the property market. I don't want this to turn into a complaining session because I've done plenty of that over the past few years on these videos. Not necessarily complaining a lot of time, but being pretty negative on that. It is what it is. Personally, for me, what I'm trying to do with this content is just try and get real with people. I don't really want to be someone that runs a business and makes money as a mortgage broker by flogging debt to everyone. I've spoken at length about personal debt and how I think people have too much. Sometimes that's not their choice because house prices are the way they are. All I'm trying to do here is get people to look at the way things are, a trace of normality, and that's really hard. So anyway, I hope you liked the video. If you disagree, please comment. Just make it an intellectual disagreement, not one based on emotion. If you want to support the channel, please subscribe. Really appreciate the feedback on the Australian economy is cooked, guys. If you also want to support the channel, you can support my business. If you need help with a home loan, get in contact. I love talking with you guys about, just whatever it is with finance. I just want you to know I'm not a financial advisor, and I will advocate people to see financial advisors, but I'm still happy to have a chat with people. So you'll find me via the links below. Cheers.